Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 51 of our YouTube channel and podcast, and I could not be more excited to continue sharing with you guys personal finance topics that I think can be so helpful to you and your personal financial life, and hopefully they have been to this point. Today, we're going to talk about something that I've yet to touch on. I've talked a lot about investing in market-based investments. So like stocks, bonds, mutual funds, ETFs, all these different things that are these, stock market or bond market based investments. But today we're actually going to talk about real estate and investing in real estate and doing it properly and effectively, because I do believe that real estate is a good investment choice. I just want to show you how to do it so you won't end up hurt and you won't end up in a place that you don't want to be long-term financially. But before we get started, if you could, go down below, hit the big red subscribe button if you haven't already subscribed to this channel. Also, like this video, leave me any feedback in the comments so I can know what you may want me to do better, or something that you may want to have me speak on in a future video, or anything like that. You can leave those comments down below. Also, if you're listening on Apple or Spotify podcasts, I appreciate you listening to this. If you could, go ahead and subscribe there and leave me a review if you think I'm doing well. Hopefully you do, and you can leave me a good review there. Also, follow me on social media at MNO with Dylan. That's a really good follow. I put a lot of good stuff out on social media day after day, and so I think it can be really helpful to you to just see those things and keep that encouragement throughout your week, even if you do miss a video that I put out that week. And then lastly, if you want to work with me in financial coaching, then feel free to reach out to me via my website, www.mnowithdylan.com, and you can go to the Work with Dylan tab and sign up for a financial coaching session today. So how do you make money in real estate investing? Well, it's basically the exact same way that you make money with the stock market or the bond market or whatever. There's really only two components, and everything's a little more nuanced than I make it, but here we want to keep it pretty simple as to what we're talking about today. Well, the two ways that you can make your money are typically the appreciation of the property that you purchase and the rents that you receive off of the property. Now, this is very similar to when you're purchasing a stock or a bond, because with a stock, you're going to get the appreciation in price plus any dividends paid out by the firm to the investors. And then with a bond, you can get any appreciation in price plus the coupon or the interest payments that are made to the investors throughout time as well. So it's not very different from any other type of investment we've talked about, but it differs in the way that you're going to go about purchasing it and all the considerations that need to be made before you decide to jump into the world of investing in real estate. Now, my view of investing in real estate is a little different than some other people's. I'm not going to push you to go deeply in debt. If you know me and you've seen my videos, you know that that's not what we're pushing you towards today. We're literally pushing you in the opposite direction. We want you to stay out of debt, if at all possible. So the first way that we can invest in real estate, and directly, and it's the only way that I suggest that you use debt to invest in real estate, is your own home. And so you may say, well, Dylan, that's not investing in real estate. That's just, buying your own home and paying off your own mortgage. Well, you're not wrong, but it is investing. It is investing in your own home, investing in the equity in your own home. And so the first thing that we want to do before we go about investing in any other types of real estate is to own our own home, is to pay off our own home, because that is something that can provide you with financial stability. And you may say, well, it doesn't provide me rents, Dylan. How is that going to help me at all if it doesn't provide me any rents? Well, it does the opposite of the provision of rents. It actually takes away your mortgage payment. So you actually do have more money in your pocket, but not by more income, but by less expenses. Paying off your house just creates a peace and stability and financial freedom that you didn't have before, because now you can invest or save more. Now you can give more. Now you can spend more money on things that you want to spend money on, because you have increased discretionary income, or income that you get to keep after all of your bills and all of your systematic things that you do within your budget. And once you pay off that home, then you can begin to move. If you are interested in real estate investing, you can move into this next idea of buying other properties. And that's probably what you're here for. That's probably what you're looking for in this video. Well, that's what I'm going to cover from here on. But we need to lay the groundwork of owning our own home, because how crazy is it to not own your own home, but own this other home, or not have as much paid down on your home as you do on this other home? It just doesn't make sense, and we don't want you to go into debt for other properties. So here's how we can go about investing in other types of real estate. And there's two big ways that I want to cover today, and those two are obviously rental properties, because those are the most common thing that you hear about, and you purchase these properties and you will collect rents off of them, and that's a really good thing to do. And then we're also going to talk about house flipping or property flips, and because that is another way that you can go about making money in real estate and investing in real estate, and you can do that prudently as well. You just need a little more guidance and a little more ability and a little more experience in knowing what you're doing with real estate before you can do that really, really effectively. So owning rental properties is a great way to go about investing, because you have this continuous cash flow and revenue that is coming in to your life. You have this property that you own, and you're constantly getting these rents, and it's a nice little cycle and revenue and income stream that you can have that is created by this asset that you own. And the key to this is always buying in a location that you can see legitimate growth of over the long term. You want to buy somewhere that will allow the property to appreciate as well as create those rents for you. Now, this is a great idea, but landlording can be really, really difficult. You don't want to just jump into landlording without doing your due diligence and understanding what that entails, because it can be very, very challenging. Because you can likely face seasons where a renter doesn't pay, or you don't have a renter in, or these different things, or you have a lot of expenses because something went wrong in the home, because you do own that home. So you have to take care of all of the expenses that go along with repairing it and all of those things. And so, yes, a lot of those things should be factored into the rents, but it can rain. There can be emergencies when you're dealing with owning any type of asset, any type of property, and this is no different. So things with rental properties do go wrong, and you need to be prepared for that. And one of the best ways to do so is to do two things. One, pay for it in cash. That way, the profit that you're making initially is not just the spread between the mortgage and the rent, because that profit margin can go away very quickly if you have no renters paying or no renter inside the property, or you have these big house repairs. All of those things can eat away at that profit margin really quickly. But if you own it in cash, your profit margin can really, really increase. Now, I know I'm going to get a lot of pushback on this, but I'll cover towards the end of this video why we want to do this in detail. And then also, you know how you have an emergency fund for your own life, also have an emergency fund for the rental property, because you never know what can go wrong, and you don't want to have to be dipping out of your own emergency fund just to cover things that are going on in this asset that you own, in this property that you own. And then, of course, there's flipping a property or flipping a home, and that's a relatively straightforward idea, right? You just purchase something, you fix it up, you make improvements, and you sell for a profit. But it's not that easy. The key to flipping homes is getting a good price, being able to buy low and then put the money in and sell at reasonable price, at market value or above market value. That way you can go ahead and flip this property into a nice profit, because you're going to want to flip it at the buy. You want to know that you're going to make money at the buy, not at the sell. You don't want to have to wait till the sell, because then who knows if you'll make money or not. And before you ever jump into trying to flip homes, either talk to people who have done it or talk to real estate agents about the particular area that you're interested in, to just find out if there's potential in doing this and there's actual profit to be made. Because I will tell you this, there is definitely money to be lost in this type of endeavor. You're not always going to make money unless you do it correctly and that you're very selective in the properties that you decide to try to flip. Flipping houses is just not as glamorous as HGTV makes it look, but It doesn't mean you can't do it. It doesn't mean that it's not a viable option. It's definitely a viable option. You just have to do your due diligence and make the correct decisions along the way, and not be so enamored by a property or talked into by a real estate agent or a seller that you end up in a place where you own something that you're putting too much into, that you're going to end up losing money on. It's just not worth it. We want our investments to be things that go up in value, not things that we're losing money on. So just make sure you do what you have to do to make sure that you get a good price, and then can move forward with either selling the home, or for that case, renting it and being able to turn a nice profit on a house flip. So you guys know that I like a process. I like steps to go through to get to a particular goal. And a way that we can do that when it comes to real estate is the following. I have some steps that we can take to purchase real estate and invest in real estate in a way that is prudent and that will allow you to have long-term gains and growth of your money. So like I said earlier, the first thing that you want to do is make sure that you own your home first, because how crazy is it to be out there owning another property before you even own the one that you live in? So let's own the place that we live first, and then try to put our money into properties outside of our own. And in a similar way, what this is going to cause you to do if you don't follow this particular guideline or this particular rule is it's going to cause you to go into debt, because obviously if you haven't paid off your own, then you're likely going to have to go into debt to buy another. And that's not what we want to do at this point. We don't want to go into debt for investments. It's not something that we want to do. We want to purchase our investments in cash and let our investments go up in value. And hardcore real estate people out there are saying, Dylan, this is dumb. You have to use leverage. You have to use debt. Well, you don't have to. And I'll tell you why. And a lot of those individuals also are just taking rents off of properties. I don't say to do that either. So let's talk a little bit about, once we pay off our own home, then how are we actually going to go about buying properties in cash? Because that seems like a hard thing to do. So what happens if you don't pay in cash? Well, if you don't pay in cash, then you open yourself up to being cash strapped, right? You open yourself up to not having the funds that you need to service the property. You open yourself up to not have the funds you need to cover the mortgage payment for a particular month. So that's one particular issue that could happen. Also, you don't get to keep all the rent. Like, you get this rent, but you got to pay out so much in the mortgage payment. You may have repairs that you have to pay for and all these things. And the rents can really get eaten into quickly if they are financed. Also, you're just going to earn smaller profits if you decide to sell earlier, because you're always going to have to pay the bank back. And that's just something we don't want to do. We don't want to have to deal with debt in this particular situation. So how are we actually going to save up the cash? How do I pay in cash? Well, save systematically. And a big advantage to having your home paid off is the fact that if you want to take that money and actually invest it in real estate properties, then you can do so, and you can build that money up quite quickly. And a way that I would suggest doing this that will allow your money to compound for you, but while you're waiting on the ability to buy a property in cash, would be to purchase some kind of index fund or something that will allow you to save systematically and continue to compound your money until you get to a point where you can purchase what you want in cash. Then you can take that money out of that individual or joint investment account, somewhere where you can actually get your hands on that money. And then once you get your hands on the money, you can go buy the property that you want to buy and start getting the rents, the cash flows off of that property. And yes, this is not a fast thing, and it's not a quick turnaround, but it will allow you to be in a place of financial strength, because we don't want ourselves to be in a precarious position to where we are slaves to a bank and we are in bondage to a bank because the bank is owning every note that we have, and we're at their mercy about things, especially if we were to get adjustable rate mortgages or be in these really long-term, the 30-year mortgage on a property or whatever. And we'll talk about that actually later this week as to why that's not a good idea. But we don't want to be doing that when we are investing. Anything else that you're going to invest in long-term, what are you going to do? You're just going to take the money you have and invest it in that thing. And I don't want this to be any different. Now, you may have to utilize something like an index fund or something like that within the market in order to continue the compounding of your money. But what you're going to end up being able to do is when you own things in cash, then what happens? You get to keep all of the rents other than any type of repairs, insurance, taxes, costs like that that can eat away at the rents. But otherwise, you'll keep all of the rents and be able to build up cash quickly to do what? To purchase another rental property. And that's a way that you can continue to compound your money within rental properties if this is something that you're interested in. And that's a big key. I'm not saying everybody should go buy rental properties. That's not some people's strength. That's not something that some people want to do, but it may be a good option for you. And then you may say, well, okay, paying in cash. Well, can I pay as like a partnership? Can I partner with somebody so we can build up the cash quicker or use other people's money? A lot of people talk about using OPM, other people's money, in order to purchase real estate. Well, I wouldn't suggest to do this either. And here is why. Partnerships in real estate can get really messy because what if you want to sell a home, but somebody wants to keep taking the rents and somebody's got to buy somebody else out, you want out of the deal, whatever. It can just get really messy. And especially, the closer you are to the person, the messier it can get because relationships get in the way. It's not just business. So I wouldn't do that. And then you just don't want to answer to somebody else as to how to manage your investments. You don't go in with your dad or with your brother or with your sister or your mom into an investment account. You don't allow them to tell you what to do with your market investments, your stock market investments. They don't tell you what to do in that. You don't allow them to. And the fact that you don't allow them to tells me that you shouldn't allow them to tell you how to deal with your investment properties either, because anybody who's got skin in the game, anybody who's got money has some kind of say. Now, don't get me wrong. People who do use other people's money can be successful. I'm not saying you can't. I'm not saying you can't be successful if you finance properties. There are plenty of people who have built multi-million-dollar net worths by financing properties, but they're taking on a lot of risk with a lot of debt, and they end up risking the fact that the cash flow could go away and they're not able to service their debt. But it can happen. It's really difficult to be successful in that way. And I want to set you guys up for the most success. You notice I am not about the easiest way to get here. I'm all about the way that is going to be the most effective, because easy means that you probably skipped over a lot of things that were necessary to do. Because if we just look at the financial action plan, it would be really easy to just be able to service some of our debts and just pay them, pay the minimum payment over time and invest the difference and not really pound our debts really quickly. And that would be an easier thing to do. But you find that you're far more efficient and you can build wealth better and faster and with more veracity, and you actually have some confidence when you do pay off your debts and you have the ability to use all that cash flow for something else like investing or giving or spending more on what you want to do. So the same goes for this particular situation. I just want you guys to be in the driver's seat and not have to ride shotgun to a bank or some partner or some other person that can dictate what goes on with your property. And I covered earlier why you need an emergency fund, right? You need an emergency fund for these properties because things will go wrong. So you need an extra amount sitting aside, 3 to 6 months of expenses for the property that will allow for, renters not paying, or there not being a renter in, or the repairs in the property that need to be paid. Whatever you expect the cost to be per month without a renter, that's what you need to save times 3 or 6. Or anything in between 3, 4, 5, 6, anything in that range. And then I would implore you to start small and allow your rents to pay for future properties. So don't try to bite off more than you can chew immediately. So like jumping directly into a multifamily property to where you are, a landlord of multiple people at the same time and you've never done this before. Start small. That way you can build into something like that, because experience really pays off when it comes to real estate investing and doing it effectively. And reinvesting your rents, and the reason I talk about putting them in an index fund until you can purchase the next thing in in cash is that you always want your money to be compounding. And you need to make sure that your rents are actually enough that you're really making money. You don't want to set your rents so low because you're trying to get somebody into the property that you end up, eating into your cash flow or not making a good enough rate of return. Because you have to remember, historically, the S&P 500, the stock market, has had a 10% rate of return, and you can grab that 10% rate of return in a tax advantaged account and grow long term, tax deferred or tax free or whatever. And that's not going to be the case with real estate, because not only do we have the fact that we have to cover the repairs and the costs of the renters not being there and all those types of things with our rents, we also have to take care of taxes, because a lot of this is taxable. So when it comes to taxes, there are a few different types, and we've talked about them before, but this is as it pertains to real estate. So there's obviously the capital gains tax. So there's obviously the capital gains tax. So when you're selling an investment property after owning it for at least a year, you'll pay capital gains tax on the profit, and we've talked about what that is, and I'll put the link to that video above. But you will have to pay capital gains tax if you sell after owning it for at least a year. Then there's short-term capital gains, which is your income tax rate. If you sell it within a year, the gain you will have to pay income taxes on. Then rental income is also taxed as income on your tax return at the end of the year. So all of these things can eat into returns. Taxes eat into net returns. And so the lack of tax advantages makes you kind of think twice as to, is investing in real estate something I really want to deal with? Because you do have to make those considerations, and you want to make sure that your money's growing at a good enough clip. So a couple quick considerations before we kind of cap off this video. And like I said, I know this is not an all-encompassing video. It's just something that I want to kick off this idea of investing in real estate, because I don't think it's a bad idea. But what do I really think? I think that it is hard. It's not easy to find good deals. You have to be active at it. You have to be working hard at it. You can't think that it's easy to make money in this. And this is all on you. This is all on you going and finding the deals and setting the rents and collecting the rents and keeping renters in and all these different types of things. You have to do it. And that kind of leads me to the next thing, is that there's nothing passive about it. People say, oh, I'm collecting this passive income off of this rental property. Well, there's nothing passive about being a landlord. There's nothing passive about owning a property. You have to work at it. You have to do all those things that I was just alluding to. And without your attention, then what will happen is either the value of the property will end up dropping off because people are destroying your property, or you won't be receiving rents like you're supposed to, or all these types of things. It can go downhill quickly if you don't do it correctly. And then, you have to choose who the renter is, who you allow to rent from you, and that's just not an easy process. People are tricky. So it's difficult. It's not passive. And then I don't want you to fall into this trap of long distance landlording. Okay. So if you can't check on your properties, how do you know what's going on with them? And also, if you pay somebody to manage your property or something, that's just less of your rent you're getting to keep. And you have to make sure that you actually trust that person to tell you the truth and be doing their job effectively in order to get you the information that you need to have and make sure that your property doesn't decline in value because somebody's tearing it up or because something has happened to it and you don't find out about it. So I know there's been parts of this video that I've been negative about things. Like I just got off of saying it's hard, it's not passive, then you don't need to be doing long distance landlording, there's taxes, all these types of things. I just want you to know all of the considerations and why it is less common than actually just buying investments in the stock market or things like that, because it takes work. It is it's something that you have to be doing and working at and learning at and experiencing before you can do it really, really effectively. And so I do encourage you, real estate's a great investment. I'm not saying it's not. It's absolutely a great investment. Just do it in a way that is going to benefit you long term. Don't go deeply into debt to buy real estate. Don't go deeply into debt to reach out in this new investment that you don't know much about it, that you haven't done before. And even as you gain experience, still don't go into debt for it. continue with the cash flow. Keep the money compounding. Don't take away from money that should be coming into you, and don't be paying banks your entire life, because the bank can become your master. Don't allow them to be. So the final word is just this: I want you to keep your money compounding. I don't care how you go about doing it. Well, I do care how you go about doing it, but I care that your money remains compounding and that you aren't losing vast amounts of money because you're doing something that is not smart or not responsible. I want you to do things in the most responsible and smart way that you can. That way we can grow our money and we can look up in 30 years and say, man, we've got this big nest egg that we can retire on. We have this money that we can do things with. And not even in 30 years, 15 years, 20 years, you can do things with your children, or you can do things in retirement, or you can do all these different things, because money gives you options. And I just want you to have that money later on. Play the long game, be patient, do all the right things, and that'll get you to where you want to go. Don't have too much of a short-term mindset, especially with real estate, because you will get burned. But if real estate is something you're passionate about and you want to invest in it, by all means, please do. Just understand that it's not as easy as people make it seem, and you can really get burned, but you can also make it really, really profitable and do it for a long period of time and make a lot of money in doing something that has historically created wealth for a lot of people. So hey guys, don't forget to subscribe to this channel. Also like this video and leave me any comments down below if you haven't already. Also, if you're listening on Apple or Spotify podcasts, again, just go and subscribe there for me if you can. Also, follow me on social media at MNO with Dylan. I put out a lot of good stuff. I think you guys would really enjoy it. You can just check me out there and just hit the follow button, hit the like button, whatever different social media site that you're on, Facebook, Instagram, Twitter, whatever. Follow me. I think you'll enjoy it. Also, if you want to work one-on-one, if you've heard something today or you've heard something previously from me that's like, I want to work with this guy, I want this guy to help me make a financial plan for myself, I can definitely do that with my financial coaching services. And you can sign up for those on the website. And that website is www.mnowithdylan.com. And you can click on the Work with Dylan tab and you can sign up for a financial coaching session there. So tune in tomorrow as I talk about the importance of paying off your home and the peace that comes with doing that. So thank you guys for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.